Let's talk about your money. We're going to get into the basics of investing.
Here's a wild thought for you. Could your savings account actually be losing money?
So, imagine your savings earn 1%, but prices everywhere else go up by 2%. What happens?
There's this kind of silent force that's shrinking what your money can actually buy. Yep, it's called inflation. And put simply, as prices go up, your dollar just buys less. One reason this happens is rising business costs, which get passed on to you as higher prices. So even with a little interest, your money's actual buying power has dropped. Crazy, right? So the big question is, how do you get your money to grow faster than inflation? And that is where investing comes in. It's buying assets that can potentially grow. This could mean anything from businesses and property to things like stocks and bonds. But here's the thing, investing is not saving. It involves risk. Your investment can go down too. So how should you think about that risk? Well, it's all about its link to potential rewards. Generally, if you want a shot at higher profits, you usually have to accept more risk. And over the long haul, you can see how different types of assets have had very different results. Markets are going to go up and down. These ups and downs, totally normal in investing. So if it's such a roller coaster, how do people even deal with all that risk? One of the most important strategies is something called diversification. Let's break it down. It really is that simple, powerful idea of not putting all your eggs in one basket. Okay, let's just quickly run through the big ideas we've covered about investing. At the end of the day, the goal is to grow your wealth faster than the cost of living. Of course, this is just the beginning. So what's the first step you could take to learn more?